What's going on, traders? It's Kyle from K Capital with a quick video on today, 7/7/2016, about 6:30 Eastern. It's been a great couple weeks. We had huge winners in MGT, MQUR, and we locked up SBGL today. Right now I'm looking at the overall macro picture, but actually let me go real quick to SBGL. So this was a pure technical play that just coincided with the correlation to crude. With the overall market pulling back because of Brexit, people kind of fluctuated back to gold as gold kind of rallied to new highs on the year. So with that, this technical play really was a nice fit to kind of coincide with that general macro play. Obviously, the more fundamental support you have for one of your technical trades, the better it potentially could do. So what we did is we went long here right around, I think, 1350 to 1380. We alerted to members, and we obviously saw that ride all the way up to 15.5, where we locked in a 12% profit when we sold today at 15. So, this was in literally less than 5 trading days, 15%, or excuse me, 12%. You really can't beat that. So, congrats to anyone who traded that with us. That's definitely a pretty much ideal target for what we do. 10, 20% in less than a week or 2 weeks. 7% downside is pretty key. So, we're pretty pumped about that. Going back to more of the general picture in terms of the overall market, let's take a look at the Dow real quick. So same story as what I said before. In essence, we have not broken through 18,000. We haven't in a couple weeks, and frankly a couple months. The 200-day moving average was completely demolished with Brexit. We bounced all last week. Shocker, not really. We hit 18,000. We're pulling back. The 13 EMA, though, is still serving as some form of support. That said, the overall trend here over the last 6 months with the RSI, as well as any other indicator for that matter that measures relative strength, you're seeing an overall downtrend. So honestly, I'm still very bearish. I still think the 200-day moving average breaks. And within the next 8 to 18 months, I still think we test 16,000. Obviously, when that happens is pretty irrelevant for us. We're going to trade with the overall market, but we're in and out of positions in, 1 day to 18 days is our average. So it's really just a product of using this as a general thesis for what we're going to do. I'm not going to look at the S&P because, frankly, it's the same exact pattern. It's just on a much smaller time frame, 2,000 to 2,500. So with that, let's take a quick look at our positions in the portfolio. SEIN, average price 774. This is now going back all the way to, So give me 2 seconds. This chart's screwed up. There we go. Sorry about that. So we've been in this for a few times, I think all the way back to April, if not before that, and it was purely a fundamental play. Technically now, I think it's really a nice pattern for several reasons. One, we're consistently trading above the 13 EMA. We can consistently bounce off of that. We're making higher lows day over day for the last 3 weeks since the beginning of June. So frankly, 4 weeks. We're seeing a nice uptrend here in the RSI as well as the Williams indicator, which is 3 of the major things that we follow. The 13 EMA is pretty key from a swing trading standpoint because it's kind of the middle ground between your standard, 20 and 50 MA, which when they cross, which I'll get to in a second, is really what's considered, the golden cross, the 20, the 50, and the 200 MA. So the 13 EMA, which is basically the exponential moving average, is, more weighted to the most recent days. That's what the exponential term really means, as opposed to the moving average. And it's usually a solid swing indicator to show relative strength because you're going to really narrow down on a range that kind of gets rid of all the day traders, so the 2, 5, 9 EMA, and kind of gets rid of all the long-term players in terms of the 20, 50, and 200. And it really gives you a nice middle ground in terms of what to use and why to use it. I always leave in the 200 EMA because it's always huge resistance or support. It's pretty much a promise here that if we ever test 861 in the next couple weeks, this undoubtedly will sell off at that point. I would be willing to bet my house on it. So with that said, we take the 13 EMA in relation to other indicators. Two of those are the RSI and Williams. There's probably about 3 or 4 other ones I usually look at. They're not covered here because it really just crowds the chart and kind of makes it too hard to read, in my opinion. So with that, that's definitely, today's price action was pretty significant because we did bounce off the 13 EMA. We traded down, but we traded down on less volume versus the average. So it's something we're continuing to watch. Obviously, we're in a loss position here of 11%, but this is one position that I've talked about the fundamentals repeatedly for several weeks now. Look at prior videos if you want to get a breakdown of that. So that is one position that we're in, and then I'll look at one more, and then I'm not going to talk about, actually I will. I'll talk about all 3. I was worried that if I post this to YouTube, some people might get the free look at what we're doing, but at the end of the day, it's the alerts and the educational stuff that's the key here for members. So what you're really seeing here is GPS, which is another play. We went long. Right now, I think we're up $1 in terms of this, so decent profit of roughly 5%. Right now the 13 EMA is continuing to be nice support here. We've had several down days. I think the 27th, the 30th, the 3rd, no, excuse me, the 2nd, and then I think today. Every single one of those, you're seeing a long tail, which indicates that, lows of the day were bought into, so that's huge. I think this is, significant resistance here. You have 1, 2, and 3 and 4 points here where, the price bounced off of that. So that was support. It's now resistance. I think once we break through that, we should have no issues, going back to up to the 200-day moving average to test 25. Well, obviously, probably trade up and down all the way to 23 and 24, but as long as we're sitting in a profit position, we're going to continue to hold that. And finally, the new position from today, GGB. We went long at 184 today off the watch list. This continued to pull back. But one thing I'm definitely keeping an eye on here is the fact that, we are holding or testing at least the 13 and the 200-day moving average. So what I'm hoping for is if you draw a diagonal trend line right here, you can see that this is, significant support. And what I'll kind of do is I'll start to break that down for you right now. So that level of support is basically telling you 2 things. One, that you're making higher lows week over week, as well as seeing significant volume on the up days. So if you want to draw down, you can see that each one of the up days, 1, 2, 3, and 4, are higher than the down days, indicating what? It's going to tell you that people are buying it more so than they're selling it on the down days. And today, what did we have? 2.8 million shares. I think the average is somewhere north of, 8. At least recently over the last 4 or 5 months. So, we're going to watch this, continue to watch this. Our stop's 171, mental stop. Don't put in a strict stop limit. If you do, the market maker is going to see it and easily take it out. So, with that, we're sitting in a good position. It's been a great month. Hopefully, you guys are making some money. If you're not a member, shoot me an email at kcapitaladvisors@gmail.com. Get you signed up. Maybe get you a free trial. Who knows if I'm feeling happy and in a good mood. So, talk soon. Again, it's Kyle from K Capital, and we will hopefully have a great trading day tomorrow and have a great night, guys.